Eve from MarketWizards.com and eMiniWizard.com. About 3 minutes into the open on the 19th of September 2019. Reminding traders to use risk capital you can afford to lose. Well, we had suggested let's use 22 as our resistance and assume that the aggressive target the longs would be looking for is try to get to that 18. Anybody that's played the open and said, I'm going to just jump on the gravy train, make sure you're paid by this 17.5, 17.75. And we said, shorts, you may want to wait a few minutes for a new high before you try. If you did that and you want to try this back end zone now, again, no safe short today. But there will be better odds, obviously, for a short before we're done today. And I think that this is our normal back end resistance. This is right here, this 17.5 is the resistance zone, and then this is the extreme level above it. So there are trapped traders who were short, and that's why I said I think you better wait a few minutes if you want to try a short, because bots don't care. And obviously the aggressive support we're using, we said let's use this 08, 09 as our aggressive support. The gap. I've got 11 as the half gap. It will take multiple entries to get a short that works today probably, unless we get some kind of crazy news. Anybody who is a weak hand in buying above the open, tight stops. This is buy high, sell higher. That's all this is. That's all we know. And we are extended. Zeke said, avoid trouble day. And there's nothing wrong, James, we talk about chicken capital. There's nothing wrong with being conservative. That's how you survive this business. If you don't like the trade, you don't like the setup, you do nothing. So we've got some trapped traders. What we don't want to do is add fuel to the fire. We don't want to get into the same predicament that some careless shorts got themselves into. Okay, so this is our half gap, and that is, if you get to the half gap today, fantastic. Below that, obviously, we've got this 08. And then, obviously, what we had said earlier today was that this 98, 97, this was our key support till broken. So just a quick review for those of you who may have come in a bit later. Okay, and that's on the predictive chart. There's no safe short today. There's a squeeze type trade. And these are the type of days, a rabid dog day. These are the type of days that kill traders' accounts. And you want to see some evidence that a general, a big boy, is going to start to push back and take profits. So we're going to use 22 as our resistance, and that might not even hold. If you are long, stops up, trail for a couple of minutes. We've got news, 10 o'clock. So possibility there'll be some profit taking ahead of the news. Okay, I've got target one at 21.50 to 22. Anybody that's within a point or so of that, make sure you're paid. So note your symmetry and understand that when we get these type of egregious pushes with all white bars, we call that the black white theory. All white bars here, there's no support built up, and we can retrace any part of that. It's usually a Fibonacci idea that we have to put into play. And same thing has happened here. This is the stage 2 of that. Boom. And again, nothing built up in terms of support. So you need a general pushing back. You need someone says, okay, let's take some profits. 22 aggressive resistance right now. And obviously the first and foremost support we're going to use is the gap at 09 and half gap at 11. And below that, then the 05s. I had suggested pre-market 20 was perhaps a big target we were looking at. Nibble, we need to play hit and run. It's not going to be one solid shot. Anybody that thinks this is going to just turn around and fly backwards, unless there's a news event, that's not going to happen. Kyle, nice job. And thank you for sharing that information about your when you're buying puts and when you're buying calls. Maybe you can help some of the traders here in the room with the idea of what you look for when you play options, at the money, in the money, the time frame you're looking for. Thanks for sharing that. I appreciate it.